Camila.
Hello, how are you?
Good. How are you?
Pretty good. Pretty good.
Camila, this is Cindy. She's from the accounting firm that I work with. She double checks all our books for us.
Hi, Cindy.
Hi, Camila. Nice to meet you.
You as well. Hi, Nikki.
Great. So we're at 2 o'clock. Let me see here. I guess we should go ahead and get started. We're recording now, Natalia?
Yes, and we're live.
Okay, great. Okay, I'll just go ahead and call the meeting to order. I'd like to call the Altadena Library's Budget Committee to order. It is now 2:01. First, we'll call the roll, a whopping roll of 2. Camila, you're present, and Rushmore is present, so we have a full quorum. With that, have we received any public comments for non-agenda items?
We have not.
We have not. Okay, seeing none, we'll go right to the one order of business, and that's the new business, and that's the fiscal year 2000-2001 mid-year budget review. So with that, I'll turn it over to Nikki and Nicole to go over their proposal.
Great. Thank you. Would it be helpful to have it up on the screen for everybody?
Yeah, I think that would be great. Thank you, Nicole.
Okay, let's see if I can do that. Okay, looks like it's there. Can everybody see it?
Yes.
Great. Okay, so this is our draft mid-year budget, and it has been reviewed by Cindy at Bailey. She went ahead and took a look at it and just finessed it and made it beautiful for us. So I can go through the report and read through the highlights if anybody would like me to do that, or if we want to get straight to questions.
I think I would just touch on some of the key highlights. I think would be helpful, just sort of point of reference, and then, you know, obviously with the bookmobile and you know where that's going to be reflected in the document subsequent to the text, and then we'll ask you questions here and there.
Okay, absolutely, I can do that. All right, so we'll start with donations and grants. That did have a sizable increase, actually. So we had to increase the line item for the foundation donation by $22,000 to reflect what was actually brought in. I think we had originally only budgeted $10,000, and the bulk of that, of course, is for the mobile library vehicle. And then there was also an $11,000 donation from a single anonymous donor for the restoration of the George Gardner Simmons oil painting, which has been restored beautifully. It's back at the library, and we do have a report ready to go on that should be presented at the March board meeting for everybody to see. There's also some accompanying video that the artist provided. So we're excited to show the board that. And then some extra funds for literacy materials. And then the Friends line was increased. And then, of course, the huge grant that Christopher applied for and received for those internet upgrades was added. And let's see, we upped the literacy account to reflect the actual income received. Fines and fees, unfortunately, we had to cut across the board. We're just due to the closure. There's just no way for us to maintain those numbers. We are hopeful that once we reopen and passport services resume, that they'll be able to make up for some of that loss. They should be open for about 3 months, I think, 3 or 4 months. So hopefully we'll see how that goes. And then film revenue, we were really lucky to get a film crew come in earlier in the year. And so we upped that line item to reflect that income. We're hoping to get one more before the end of the fiscal year. We'll see how that goes. Transfer in from reserves, we were able to reduce actually significantly due to the major income lines that we received, and due to being underspent in so many accounts. We're still able to maintain that net zero budget, but reduce significantly the amount that we had to bring in from reserves at the beginning of the fiscal year. And we can touch on that more a little bit later if you guys want. Property taxes, we did increase the secured property taxes to reflect what was actually received by that $128,000. Same with the special assessment, we received a little bit more than we budgeted for, so we were able to add $29,000 to that line item. Unfortunately, we're not getting nearly as much in interest income, so that line was reduced by $15,000 to reflect what we've already received and what we might potentially receive throughout the rest of the year. Capital expenses, we did a lot of adjusting here, we did take out 10,000 for a project that Jonathan will not be able to complete before the end of the fiscal year just due to COVID restrictions. But then we were able to add that 36,000 from foundation and from a contract renegotiation in technical services to accommodate that purchase of the mobile library vehicle. So that will be a capital expense. And then we did add that 11,000 for the painting restoration to that account. Structures and improvements, Christopher had originally budgeted this $30,000 for some alternate E-rate upgrades due to internet, but that was superseded by the second grant that he received. So because we didn't need to spend that $30,000, it's taken care of by that $345,000 grant. Facilities, we just did a little bit of tweaking there. We'll need more for some major tree trimming, but we don't need as much in other accounts. So those were all adjusted. And then this was the contract renegotiating this 16,000 with our vendor OCLC, and all those funds were able to be put towards the purchase of the mobile library vehicle. The trustee election, it was a big election. We weren't really anticipating that. So we under budgeted for that at the beginning of the year. We were able to pull that extra 50,000 from architectural and engineering, since unfortunately we won't be able to get that done before the end of the fiscal year. We were able to pull those funds and add them to the election fee, which I believe when Natalia originally got estimates from the county, it was put at about 120,000 for the total cost of that election. Staff costs and professional development. Unfortunately, again, we had to reduce most of these accounts. No one is accruing mileage, and unfortunately, a lot of the trainings are either not being offered or not being offered in person. So we are able to save quite a bit of money. Fortunately, with the virtual trainings, they come at a lower cost. So we are still able to provide actually even more trainings than we usually are, because there's no travel involved and the cost is so much less. But we're hoping to replenish those next fiscal year if the conferences are put back on so that more staff can attend. And then, other operating expenses were either over on some, under on some. We're a little bit over on our basic operating fund, that 6770, due to purchasing a lot of PPE, which we are keeping track of in our accounting. They're all marked COVID-19 so that we will be able to apply for some reimbursements for those purchases. Salaries and wages, we did have to do a switch there between salaried and hourly. We have had higher hourly expenses due to an increase in vacation payouts. We did have a few staff retire, and we had a couple that moved on. So anytime a staff person resigns, their vacation is paid out to them in full. And we've also had several staff reach their maximum accrual. Unfortunately, staff just aren't able to take vacation this year. So a lot of them are just sitting on a huge bank of hours that have had to be cashed out. So that upped our hourly expense, and we adjusted salaried accordingly. Retirement. Two of our newest hires are classic members, which is a rare thing that doesn't often happen. Anybody hired after 2013 is automatically a PEPRA member. So it's rare for me to hire somebody who ends up being in the classic pool. So I just had to adjust those two. Technology consulting, Christopher did not need those funds. He hires an E-rate consultant, I think every few years, to renegotiate our contract for the internet service. We get most of our internet service expenses reimbursed, but he does have to hire a consultant to negotiate that rate every few years. But again, everything was covered by that huge grant that he received. So he didn't need those funds either. So those were reallocated to buy hardware to fit the mobile van, so shelving and any electrical and anything he'll need for that. And then equipment again was increased with funds that he reallocated from his technical services accounts for that purpose. Audit and financial consulting, we have had to spend more in that account than we originally anticipated, just due to all the CFD related work. So funds to NBS, to Columbia Capital, things like that. We just moved it from the main consulting account to the financial account so that it's allocated correctly. Legal fees, we reduced. I'm always a little nervous to do that, but we did. We're not spending as much as we have in the past. So we reduced that one by 15,000. And then programming, Unfortunately, again, we just haven't been able to offer as many in-person programs, and those are the ones that typically are the most expensive to put on, like our second Saturday programs, our filmings that we have out in the parking lot. We just haven't been able to do anything like that. So there were some significant cuts to programming. We were able to reallocate as best we could. A lot of the youth services programming went back into the materials budget, so they're spending a lot more on books and on e-materials. And then the adult services programming budget, some of it went to branch, some of it went to the new mobile library account, but the rest of that went into reserves, and hopefully they'll be able to spend that next year on some more in-person programming if we're able to provide that. Volunteer services, again, we don't have any volunteers in the building, so we're not able to put events on for them. And then we were able to create that mobile library account. We're really hoping that if we can get that van purchased in the next month or so, we will have enough time to put on a bit of programming before the end of the fiscal year. So there is some money allocated there. And then again, due to keeping everything balanced, we're at net zero, and we're actually able to put quite a big chunk of money back into reserves. So I think we're doing pretty well, actually.
Wonderful. Well, thank you very, very much for that thorough review of the document. So with that, I'll turn it over to Camila if she has any questions on the document presentation we just had.
I had one just clarification. So above, when you said that for example, the fines and fees was reduced by 75,000, to make sure that I understand, basically you're saying that we're not counting on that income of fines and fees because of COVID. So that was removed from the budget.
Yeah, absolutely.
Okay.
So you can see here that we normally fees are things that people pay for like lost items. We don't charge late fees, but if anything is lost or damaged, they pay for it. And I have had a little bit of money trickle in there. It's just been so inconsistent with people being able to borrow. People aren't borrowing quite as much. So we did reduce that one. And the printing, we get a ton of revenue from printing. When we're open, people constantly come to us to print. So it's really unfortunate that we've had to lower that line item. Hopefully when we resume curbside, we can resume doing the curbside printing appointments, because that is something that people really rely on us for. And again, passports, unfortunately, another good source of income. They just haven't been able to operate, but hopefully they can for the next few months. And then sales of products, we took down only a little bit. We are really trying to get a store on our library website. We do have a few branded products that we're hoping to be able to sell to patrons. So we didn't take that one down quite as much.
Okay. Makes sense. Thank you.
Great, thank you. So I guess a couple of questions, just kind of a macro level first. I'm very happy to be able to reprogram dollars back to the reserve fund, but unfortunately that means that we're not really operating sufficiently to provide the services. But be that as it may, so as I read it, we've got about $1.9 million in reserves, and I'm kind of curious as to on your annual budget, how often are you drawing from that, and is there a required percentage of the Altadena Library District budget has to be set aside for reserves?
Yes, absolutely. So according to our financial policies, we're required to keep 6 months of operating expenses in our reserve balance. And then every month when I present the financial reports to the board, there's always a little section that shows how much we have in reserves and how much is required to fulfill that 6-month rule. So we're always in compliance with that. But Cindy, actually, the last time we presented the budget, her firm was able to do 10-year projections that showed that without an additional source of funding, we would be dipping into reserves by, I think, just 3 years from now. And then by year 10, we would be out of cash. So that's why we were so anxious to pass the CFD as soon as we could, to make sure that we weren't falling below that 6-month threshold.
Right, I appreciate that. And Camila, you don't have this, but I had the opportunity to be looking at some budget assumptions for the current fiscal year, and there was a COVID revenue reduction schedule that went through the 10 years. And Cindy, I think you prepared that, and basically showed 75% reduction in year 1, 85 year 2 of COVID, and then which is basically this year.
So
And
what
then
that was,
100%.
the way we set that up, I don't really like that. it's what percentage of revenues. So we were saying we'll only get 85% of revenue. So it really should have been like a -15.
Yeah.
Yeah.
So I was asking the team, I couldn't quite figure out what that meant.
Mhm.
So, okay.
For some
But,
reason,
yeah.
the formula was easier to set up this way, I think, and that's why we set it up this way.
Yeah, well, that makes sense.
Mhm.
Excuse me. And then regarding the library materials, and we were able to reduce the cataloging expenses by 16,000 and repurpose those for the mobile library. So we've got 16,000 that we're able to purchase for the purposes of the vehicle. The 168,000 all going back to the reserves. As far as the materials, we're just going to basically, and this kind of goes to the OCLC reduction, I think, or recalculation. That was because we just don't need the materials like we did. We're not burning through the material, and that's why we were able to reduce it. What was that renegotiation about?
Yeah, Nikki, did you want to speak to that?
Yeah, I'll speak to that. So OCLC is a database that's used to build catalog records.
Mhm.
So most of our materials we order from a vendor called Baker and Taylor, and they come in already cataloged and processed, ready to go. So the OCLC access was for the items that we were adding to the collection that maybe we purchased from other vendors that didn't come in processed already. So Christopher, who's now oversees technical services, worked with Baker and Taylor to identify a source of catalog records through them that we could use rather than having to pay the $16,000 a year for OCLC to have access to those catalog records. So it was just like a database that we had access to. The other thing that we used OCLC for was interlibrary loan, or ILL, which is where the service where we can bring in books from other library systems that we don't own, as well as send books out. We were able to keep that service and then just drop the other database that we really didn't need access to. Because like I said, the large majority, I'd say over 90% comes from that one vendor, and it's already done.
Okay. But that's a recurring expense. So this time next year, we'll have a larger budget, you think? Or the same amount, 16,000?
Well, I do believe, if correct me if I'm wrong, Nicole, but that cataloging expenses is going to just go away as a line item, because the ILL, I believe, is being considered an electronic database or subscription.
I see.
Yeah, so it'll be 6,000 if we take that 16 out of that 22, since that's all we're paying for now is the ILL service. And yeah, I believe Christopher intends to fold that into another line.
Okay, great. Thank you for that. Just kind of randomly going through a couple things. There's a line item for unfunded benefits, retirement benefits, and I wanted to know what that was exactly. I should have marked it.
The
unfunded.
Yeah. The unfunded accrued liability. I can speak to that a little bit. I'm going to maybe ask for Cindy's help on that.
On 110.
Yes, the PERS unfunded. So we have liability on our books for retirement that's related to retirement. So our actuaries calculate what our liability rate is based on how many retirees we have, how long they think they will be using benefits, things like that. So that is just the liability amount that CalPERS determines that we owe. And I'm going to see if Cindy can maybe offer a better explanation than that. That was very broad.
No, that every year you have to make a payment in July. That payment is over 20 years, theoretically, should pay down the PERS unfunded liability. That unfunded liability derives from the fact that PERS is making a certain promise to employees when they retire for their retirement. And so the actuaries go through every year and determine, all right, we've made this promise and we've collected X amount of dollars, but we've promised Y, which is more than X. And the difference is the unfunded portion. And everybody's unfunded in PERS, and it's really, it's kind of a culmination of, they had a few years of very bad investments where they projected to make a certain amount. And so they didn't. And when they have investment losses, that creates the spread of your unfunded liability, because they're not collecting enough from you because they're not making enough on their assets. So that will be paid off at some point over the years, but that is the obligation that we pay every July.
That would be very interesting to actually be able to pay that off, because most municipalities continue to have debt on the books because the employees, the retirees live longer, and the payouts continue to get larger over the years. So it's not unheard of to have that in the books. So I just wanted to talk about that briefly.
Sure.
Legal fees. So what do we typically use our money on for legal representation? What's that for typically? I'm happy that we were able to reduce it, but I was kind of curious what we typically use those monies for.
There's a few categories that we typically spend out of. There's general government. So anytime we have questions about really anything to do with special district legality or the board or the Brown Act or things of that nature, that comes under general government. And then we also have labor and employment. So anytime we just need clarification on anything like that, they're also reviewing a lot for us. So they review our RFPs, they're reviewing our sample services agreement, things like that. That's typically what we're paying for.
Okay, great.
As well as personnel questions. Like if Nicole and I feel like we should get some guidance, we'll reach out to them.
Okay, that's helpful. Thank you for that. I just got curious as to what was filmed at the library that we were able to generate that revenue.
I don't think anything was filmed. They used our parking lot and they used our community room as like a staging area for like, so like, you know, the big house next door, it looks like a castle kind of. They filmed a commercial there and they rented some of our space, and then another group rented the parking lot. So no filming actually, but it was interesting because a couple of the directors did tours of the library while they were there. And I do think there's going to be some things coming up. There was definitely interest.
That would be great. I mean, that's nice little revenue to have come in from time to time. You know, once you get into it, almost like if you get into the circuit, then it becomes it's on the Rolodex. They'll come back.
Yeah, we actually are revising the filming policy to reflect more competitive pricing in terms of renting our space to use it. So the board's they'll be seeing that this month.
Okay, excellent. Thank you for that. And actually, this is a question for Cindy for the library as a whole. Are we required to do single audits, or do we just do the certified returns? How do we as a entity demonstrate to the taxpayers and to the public that we've met GFOA standards or whatever appropriate standards associated with a library district?
Well, every year you get a annual financial statement audit. It's required by the state, and that assures that you've been following GAAP, which is governmental accounting practices, generally accepted accounting practices that follows the GASB's, the Government Accounting Standard Board pronouncements. A single audit's required when you get a federal grant and you expend more than $750,000.
Okay. That's not the case here then.
That's correct.
Okay. Got it. Okay, great. And then just real quickly on the monies that are held by the county. There are dollars, but they're within the county. And I noticed in one of the budgetary documents that I had been discussing with Nikki and Nicole, I couldn't discern these various line items. So Cindy, are you the one that works with the county to figure out what's what in those buckets of county dollars?
We do. We record the county revenues and reconcile to the county bank account every month to make sure what we have in there reconciles to what our books are.
Okay. It'd be really helpful, not for purposes of right now, but I'd really be kind of curious about just kind of maybe get a more detailed kind of breakdown what each of those separate buckets are within the county.
Yeah, so, and I'll be honest with you, I'm not the expert in that. We could bring in Paul Kmark, the auditor. He really is dialed into LA County. I'm a little bit more dialed into Orange County and Riverside County, but I'm sure he could help. I do know what most of them are, though.
Right.
And like the current year secured is real property, and unsecured is on things like people pay taxes on property on their furniture, and the businesses do a property tax return, and that's not considered secure. And then the prior year collections come in. That homeowner's exemption, everybody gets a homeowner's exemption on your property taxes. And I think the county backfills that for the loss of that revenue. And I believe it's 35,000 a home, if I'm right. Paul would do a much better job at this. So, but I could bring him in and give you a little.
I don't necessarily have to have him come in, but certainly if I could, maybe we could talk offline. And the reason I'm asking is that I'd like to prepare, and the board president asked me to see if I could put together just kind of a very high level tutorial as far as in layman's terms for the taxpayers of Altoona, kind of like where the different sources of monies are coming from, and it would be very helpful in layman's terms to be able to lay out, kind of like a pie chart, but really each one of these buckets, what they really mean, so that they understand where the monies are coming from. And so, I mean, we know this in the county. So, but what is that? So, and what's that comprised of? So it would be very helpful if we can talk offline and kind of, I can put together some sort of semblance of a report that we can include that in our manual for future board members, so they understand where the monies are coming from. Great, thank you. I think those are all the questions that I have. Any other questions as I was asking away? Yes, please.
I actually wanted to circle back just for my own edification. When you were speaking about the reserves and the projections for, towards 10 years out, and when we might have to dip into the reserves, and then the statement was, it was good that we got the CFD in place. And I just wanted to understand the relationship to those. I'm not very clear on that. And so if you could give me kind of a high level overview of how those things relate to each other.
Absolutely. Yes, I can do that. So I have here, we were just talking about property taxes. So this is where the bulk of our income comes in, is from property taxes. You'll see this special assessment is the measure A that was passed. So this accounts for about, almost 900,000 annually of our budget. Without this special assessment, we would have to really cut personnel and hours and operations. We wouldn't be able to offer nearly as much as we do. That's the main reason that Altadena went out for that special assessment, was to make sure that the library could remain open for as many hours, be fully staffed, offer as much as we do. But as we all know, that was going to sunset. And without it, we would have had to do all those things. We would have had to make all those cuts. And we never, ever would have been able to do any of the capital improvement projects that we needed to do. We just don't have enough revenue from property taxes to ever be able to do that. So that was the reason that we really needed the CFD to come through, was to not only replace this special assessment, but to bring in a little bit more revenue so that we would be secure in future years, and to also provide that funding for the capital improvement projects that we will need to do.
Great. Very good question. Great. Any other questions?
When I was just going to add, when we approached the structure, the rate and method of apportionment with the CFD, we increased the service and operational funding by 25%. So yeah, so it's not going to be at that same level right now. It would actually come in, I think we were anticipating closer to 1.1 or 1.2 million a year to replace the special assessment. Because to Nicole's point, the special assessment sunsets in 24-25. And with the projecting that we were doing based on the assumptions that we had at the current rate of the special assessment, it still wasn't going to be enough. So again, like that's where the CFD was a great option for us, because not only could we go out and get this capital funding, but also replace the special assessment funding at that higher level all in one ballot. You know, had we just gone out for like a general obligation bond for capital, then we would have had to go back out in a couple of years to replace the special assessment money. So that's what drove creating the CFD.
Excellent, thank you for that.
Mhm.
Okay, Camila, any further questions?
No, I
Great.
don't. Thank
Okay.
you.
All right, well, I have no further questions. So with that, this is not an actionable item. This is just an FYI, and this will then be considered by the full board at the next board meeting. Is that correct?
Correct. Yes.
Great. Great. Thank you. Okay, and then so with that, the next budget committee will then, I presume, Nikki, you and I haven't spoken, but that would be for the proposed budget for next fiscal year. Is that correct? And when do you think we would have that, in May, April, May?
Yeah, what we did last year was, when we had the proposed budget ready to take to the budget committee, we met with them, I think in like beginning of May. And then we took the proposed budget to the full board just to get feedback and thoughts, and then brought it back again in June as a final budget for them to approve.
Okay. Great.
So we could potentially have 2 meetings, maybe. It just depends on how things go.
Okay. So maybe we can get something on the books now for maybe the first week of May for the budget meeting to consider the proposed budget. At least we'll have it on the books now. You can always move it if necessary and go from there. So Camila, any other beyond the proposed budget for next fiscal year? Would there be anything else you would want to have on the agenda?
No, I don't think so. I myself am interested in the layman's terms, not training, but presentation that you might do. And so I don't know that needs to go on the agenda at all. I'm not really sure. I'm just curious about that as we go through this process together on this committee. Anything I can, in terms of my own edification, that would be awesome.
Certainly, what I'll do is I'll share that with you. I'm not sure it's going to be something for I can share it with the committee, as well as the full board. It's just informational only, but just again, just like for yourself and others and myself, just make sure that we understand everything is that goes into that budget in layman's terms. Nikki?
Yeah, Katie and I had a similar conversation. So Nicole and I were talking this week about kind of creating a budget explainer for, that would be posted on the website. So anybody that wanted to read the budget documents would understand, like, not, line by line, but generally where things come from, how they're spent and all of that. So hopefully we could just work with you on that, on creating that.
Yeah, that makes perfect sense. Yeah, I mean, something for the public on the website, and then something to go into, the foundation, not bylaws, but certainly the guidelines. So this for all future board members, they understand as well.
Yeah, the reason why I brought that up is I thought it might be interesting just for me. I don't know that we'll be meeting, how often we'll be meeting. So that's a question that I have for this committee, how often would be happening. But each time I see, the budget in the package, I'm like trying to parse just like one piece of it so that I understand each time. And so I just think that conversations like that are really helpful, just, asking, little bit by little bit, because it's a massive document to try and understand, especially if you're not numbers friendly, which I am not.
Right.
So I was just thinking, in terms of the agenda, if this is going to be a regular meeting, like a little mini, lesson or, explanation of some of the different items each time would be helpful.
Sure.
Right. Well, that's a good idea. And what we could probably do is we'll work together to put together, the ABCs of the Altino Library District budget. Then perhaps we can have a discussion, in a budget meeting, perhaps after the May meeting, because we want to make sure we get the budget through, and then maybe June or July, then we can probably have we can have a meeting and just kind of go over all the details that go into it. If that works for you. Yeah. Great.
Some other potential topics that we'll want to keep on the radar is we've been having conversations, and Nicole and I need to talk to Cindy about this more, but creating a separate fund that would have all of the capital money in it, so that when we're issuing the bonds, the money goes in there, and then potentially down the road would serve as a separate fund. We had talked about it being a CFD fund, but I don't know that that makes sense for when the service and operational funding kicks in, because that really is more appropriately in the general fund. So that's something else that we'll keep you guys updated on. In addition to that, another goal of Nicole and I's this year is to update the financial policies. So I could potentially see the budget committee meeting to review those before they go to the full board as well. So I don't think the budget committee is as set. It just depends on what comes up, you know, in terms of what should go before the committee. Wouldn't you say, Nicole?
Well, actually, in the policies, we are supposed to meet every quarter, but of course we can meet more often. That's just the minimum, is that we meet quarterly to do the annual budget, the mid-year review, and then a couple of check-ins.
Yeah.
Right. That's what it sounds like. I was going to say to Camila, it's not really necessarily set, but I think quarterly would make a lot of sense. But if we have to, we can do some ad hocs as well. So I think that would make perfect sense. And we'll just rely on Nikki and Nicole. Let us know any kind of pertinent things that need to be discussed, like the financial policy, certainly like some of the things we're talking about here. So, but I think the next one subsequent to the proposed budget will be that tutorial, kind of lay things out for everyone. And maybe we have it done by then. I'm not sure. We'll have to work, with Nikki and Nicole, and Cindy's going to have her counterpart to help us with the accounting piece, so we can piece this all together. So we'll put together one package, and we'll figure out what goes on the website and what goes into our various district books. So with that, I think that concludes everything we need to talk about today. So, Camila, anything else before we adjourn? No? Okay, great. Well, everyone, thank you very much for your time. Cindy, really appreciate you joining us.
Too.
Nice meeting you. Look forward to working with you as well. Ladies,
Okay.
Nikki, Nicole, great job as always. So with that, the meeting's adjourned. Have a great afternoon, everyone.
Thanks.